Investing in the stock market isn't just about finding good companies and buying them whenever you want. You could find a company with a huge growth rate, tons of cash, and impeccable business model, buy that company at the wrong time, and still lose money. So how do we avoid this? I personally used candlestick charts to time my entries and exits to try to pinpoint the best entries for both my long-term investments and my swing trades. In today's video, we are going to be doing an in-depth, step-by-step tutorial on how to use candlestick charts to become a better long-term investor and a better swing trader. Candlestick charting can help you find those pinpoint entries to get in right at the best levels, the levels of support, buy in, and then they can also help you find the best time to sell and take profit. A lot of newer traders and investors think that making money in the stock market, pulling profit out of the stock market, is just about finding the best companies. And sure, it doesn't hurt to find good companies, but taking your investing to the next level can be done using technical analysis and using candlestick charts. So in today's video, we're going to be doing a full deep dive into technical analysis and candlestick charting. If you're new to the channel, this is Touchdown Trades. My name is Kevin, your trading BFF, your stock market bestie. Go ahead and hit that subscribe button and go ahead and destroy that like button for me. And as always, let's secure that bag by making smart investments and sound trades. Let's get it. What's good, all my trader and investor homies? Today we're going to be switching things up a little bit. We're going to be doing a tutorial, a how to improve your investing and trading accuracy using candlestick charting and technical analysis. A lot of times I see newer traders and investors focusing primarily on picking stocks, looking at the fundamentals, looking at the company's business model, the sector, and they pay no attention to the chart, to the technical analysis, to the candlestick chart. And candlestick charting can help you improve your entries and exits and really pinpoint those buy zones that can allow you to buy off support levels and really get into these stocks at good times, right when they're hitting that support and right when they're about to bounce up. If you ever see a guy on YouTube just using Google charts, the line charts, to talk about the stocks that he likes, you should never watch that guy again because he has no idea about technical analysis. Technical analysis is very important. It's just as important as fundamental analysis in finding good investments and finding good stock trades and investments. All right, so let's jump right into this. But before we get started, go ahead and destroy that like button for me. It really helps me out, helps the channel grow. I put a lot of time into these videos, and all I ask for in return is to destroy the like button. If you're new to the channel, consider subscribing below and hitting that notification bell so you get alerted every time I post a video. I got a candlestick chart pulled up and it is on the ticker Workhorse. The ticker is not going to really matter during this tutorial. We're just going to be focusing on the charts. All right, so let's talk about what a candlestick is and what data is enclosed in each candlestick. I have a monthly chart pulled up and we're going to talk about the data enclosed in one single candlestick. All right, so let's look at this candlestick right here and talk about the data in that candlestick. It'll allow us to better understand how to use these charts to become a better investor. So this candlestick right here is green. That means the stock went up. I know this is pretty basic stuff, but we're just going to touch the basic fundamentals first before we dive into the more in-depth stuff. So this candlestick is green, meaning that the stock went up from open to close on that particular candlestick. We're currently looking at a monthly chart. So each candlestick encloses a month's worth of price action, a month's worth of data. So this candlestick right here is the duration of a month. There's a month's worth of trading data in that candlestick. So it opened up down here. The month opened up down here. We can see that because that's where the bar is full. And then during the course of the month, the stock went up and it hit a high right there. The high was right there. We can see that. That's called a wick. Where you get that skinnier line that comes up, that's called a wick. and that's where the high of that particular candlestick was. It was a high of about $20 per share. The stock did not close the month up there. It kind of pulled back a little bit and closed the month right there. We know it closed the month right there because that's where the bar is full. So if the bar is full like that, that means that the month closed right there and opened right there. So we need to remember that. All right, let's take a look at the next candlestick to the right of it. It is red. So that means the month closed down. On the month, we traded lower and ended up closing lower than the previous candlestick. So we opened up right here. We know that because the bar is full right there, and that's right where we opened up. We initially started trading higher. We broke over that candlestick, and we know that we came back and closed lower. We closed right there because of the wick. The skinnier line is the wick, and the fuller line is where you get the open and close. So we traded up. We ended up pulling back down, all the way back down under $15 a share, came back up and closed right there. So now that we have a better understanding of what data is enclosed in these candlesticks, let's talk about how we can implement the candlestick charting in our trading to become more accurate and more profitable. All right, so let's talk about support and resistance in candlestick charts. This is very important because a lot of people say technical analysis doesn't work. But just look at this chart, and when we break it down, you'll see that that's just not true. Technical analysis is very important and can allow you to become extremely accurate in your trading, in your investing, and find those buy zones and find those perfect profit targets, areas where you should be taking profit. I'm going to take you through step by step on how I break down a chart. So the first thing I do when I pull up a chart, so let's say I just pulled up this workhorse chart, I'm looking at it from a technical analysis perspective and looking for areas of support and resistance where I could possibly buy at or possibly set a profit target at. So the first thing I'm going to do is plot out my support and resistance lines. And the way I'm going to do that is I'm going to grab my horizontal line tool and I'm just going to go through and look for symmetry. Symmetry is support and resistance. So we have an obvious area of symmetry right here at the $23 level where it came up, tested that area, and it ended up not being able to break out of that area and failed. That's going to be an area of resistance. We then came back down and we found support at the $13.40 area, and that's going to be an area of support. So we need to mark that down. That $13.40 area has now become support. So now let's continue further on. You always want to work left to right, and that will help you narrow this down. So then we finally broke over that 21 level. We can see it came down, held support, bounced back up, and now is acting as support. We always want to mark out the highs and lows for our support and resistance. So we got our support and resistance plotted out. And what does this chart tell me now? How would I, now that I've got my support and resistance marked down, how would I go about attacking this chart, looking for a trade, looking for an entry? So we don't want to buy at highs. We don't want to chase. We don't want to get involved in FOMO and buy at the highs when a stock is extremely strong. We want to buy pullbacks into support and sell into strength into resistance. Okay? So what I would be looking for on this workhorse stock is a pullback into this $23 support area. That would be my buy zone. Why? Because we have a valid support area right there. We can see that area has been held over the past previous couple of months, and it's a valid area support. And we want to buy pullbacks into support. So I would set an alert on my chart to alert me when this workhorse is pulling back into that $23 area, and then that would be my buying opportunity. Then I would look for this thing to bounce back up. If I was swing trading it, I would probably be selling up here near $30, up near that resistance. But if I was holding it for a long-term investment, I would probably be looking for it to break out over those levels and make a new high. Let's take another look at a different chart and do the exact same thing. One more example, and then we'll move on and talk about some more factors regarding candlestick charting that you can use to become a better investor, a better trader. All right, so our first step we're going to plot out all our support and resistance lines. We got a nice area of support up here at the $34, $35 area, which would now be resistance because we're trading below that level. We're looking at the Hyliion chart right now. We have a nice gap area here. Gaps are very important in candlestick charting. When you have a gap in the chart like we have right here, gaps tend to get filled. It's an area of empty space, and that empty space is going to be the path of least resistance, and that empty space is probably going to get filled at some point, and that's what we're looking to do right now. This chart looks like it wants to fill that gap. We also have the all-time highs that we need to plot out, because the all-time highs are very important areas, and we also have another area of consolidation right there. So volume consolidation is very important. When you have an area where it starts to consolidate, that can act as very heavy support and resistance. We also had that right here, and we also had that down here. So volume consolidation, areas of where you have a big run up and you put in a high and then pull back, that's a nice area of support. So we have our support and resistance plotted out. Now how would we attack this chart? First, we're trading below all of our support areas, so we need to see if there's any more support areas down here that we could look to buy off of. We have a nice gap, a little gap right there and some volume. So that would be an area that you could look to buy off of and risk off of right here at the $28 area. We're currently testing that area of support right now. So that wouldn't be a bad buy right there on this Hyliion. In fact, I may take a look at adding into that area of support. You can see the support right there, and we're currently testing it right now. You also had an interaction back here. The more interactions that a support area has, the more valid the support area is. For example, look at this $34, $35 support area. 1 interaction, 2 interactions, 3 interactions, 4 interactions, 5 interactions. So that $34.75 area, that's a very valid level of support. And remember, we always want to have a plan before we make an investment, before we make a swing trade. That plan should consist of, where do I want to buy? What support area do I want to buy off of? You always want to buy in front of support on a pullback. Where do I want to sell? Do you want to sell in front of resistance into strength? So when the stock is going up, for example, the stock is going up right here, you're coming into resistance, that may be a good area to take some profit off the table. Also, stop losses. You can use these support and resistance areas to set your stop losses. For example, right here, this $43 area support. You have the consolidation. You could have bought off this $43 level looking for the next leg higher, but you could have also used it as your stop. So you get the fake breakout, and then you get the pullback, and you break through that support area. On the first daily close, on that first candlestick that on the daily chart that closes below this support area, that's going to be my stop loss. Why? Because it broke through the support, and you're probably going to test the next area of support, which is right down here at 34. You failed that area. You're going to go down and test the next area of support, which is down here at 28. So we can see how this support and resistance areas on these candlestick charts can really help us create a trading plan, a valid trading plan, a valid thesis, find our areas of support, find our buy zones, find our profit target zones, as well as our stop losses. All right, let's talk about indicators. We do need some indicators on our candlestick charts because some indicators are good and will help us to add some relativity to our trading and investing, but don't get too carried away with indicators. Indicators are typically lagging. They're telling you what's already happened and not what's going to happen. But we can use them to find areas of support, areas of resistance, and to find relativity. What do I mean by relativity? I mean, is this stock trading below where it typically trades? Are we getting this at a good deal? Or is this stock trading above where it typically trades? Are we buying it too high? For example, one of my favorite indicators is this gray line down here, the 200 moving average, the 200 exponential moving average. I only use 2 exponential moving averages because you don't need that many, and only a couple of them are really valid. The 200 EMA is what institutional traders and investors use, hedge funds use to buy off of. They want to buy near the 200 EMA because that gives them the idea that they're getting this stock at a good deal. 20 EMA, this is a faster EMA. It's going to be more reactive, and if the stock is trading way above the 20 EMA, it's probably too extended to buy. But if it's trading way below the 20 EMA, like Hyliion is right now, you're probably too extended to the downside, and a pop back up towards the 20 EMA is likely to happen. And you can use the support and resistance lines and the exponential moving average indicators together to better improve your odds of finding a winning investment and finding a winning trade. For example, on this Hyliion stock, we have a support area here at the $28 level. We also have the 200 EMA coming in, closing in on that level. So if Hyliion just consolidates for a week or so and this 200 EMA starts to creep up into that level, into that support level, that's called convergence. When you have a support area and an indicator coming in together, that's called convergence, and it's just reinforcing the idea that this area in the chart is a valid buy zone. So you have two indicators, the support line, the horizontal support area, the EMA coming together, and that's giving you the validity to buy that stock at that area, at that support area. It's going to improve your chances of getting in at good prices on these stocks. All right, and the last indicator that I want to talk about that I use is the RSI. The relative strength index can tell you whether a stock is overbought, it's too extended, or if it's oversold, whether it's too extended to the downside and there may be a pop coming soon, a move back up. So let's look at this Hyliion stock and look at the RSI. I got the RSI down here, the relative strength index, and we can see that anytime the RSI breaks over this line, this top line there, so we did it right here, you're pretty much too extended and you can expect a pullback. Right here as well, we did it. So that was right here and we got a nice pullback. On the flip side, currently we're trading down here on the RSI, telling us that we're too extended to the downside and that we're probably looking for a pop back up to the upside. So right now in the Hyliion chart, the RSI is telling us that we're too extended to the downside. We're coming into a symmetrical support area, and also we have the 200 EMA coming in. So this is telling me that this Hyliion stock is probably in a buy zone and that we may want to be looking to invest or swing trade it. We have three indicators coming together. We have the RSI, we have the support, and we also have the EMAs coming in. So we have three factors coming in together at the exact same time, telling us that this trade idea, this support area is probably valid. And when the more factors you have coming together telling you that this area is a good buy zone, the better chances you have of getting a good buy, a good price on your investment, on your trade. The charts that I'm using right now are Trend Spider charts. It's an awesome charting package. They're a partner of the channel. It is a really good charting package, has all the tools, very intuitive and also easy to use. There's a 2-week free trial, link in the description down below. If you want to check that out, give it a try. If you don't like it, it's risk-free. You can cancel. So check that out, link in the description. One last thing I want to talk about before we close this out is trend lines. Okay, so trend lines are also pretty important. When a stock starts to get really tight, it starts to build up. The price action is consolidating. It starts to build up. It's either going to break out one way or the other. There's a lot of pressure building. So if you break out of that trend line to this way, to the upside, you're probably going to get a pretty significant move higher. If you break out of that consolidation trend line to the downside, that triangle to the downside, you're probably going to sell off pretty hard to the downside. For example, this workhorse chart had a nice descending triangle forming like that for about a month, and we were holding support and you got that descending triangle. Once we finally broke out of that trend line, came back and retested it, and then we finally broke out and it was off to the races. So you can use trend lines, your support and resistance horizontal lines, your RSI indicators, and your EMA exponential moving averages to just improve your trading accuracy, improve your investments, get those long-term investments at better prices, at better deals, at those support levels, and it will just help you to improve your return on your investments, become more profitable, and just not be buying wherever you feel like it's a good idea just because you have an epiphany. It shouldn't be like that. You should have a plan. Why are you buying here? Why do you want to sell up here? And why do you want to put your stop loss there? Candlestick charts can allow you to form those plans, and that's why I love technical analysis, and that's why I love using candlestick charts. All right, that's going to wrap up this video. I hope you guys got something from it. If you did, go ahead and hit the like button. It tells YouTube that these videos do provide value, that they are informational and help to promote the channel and help grow the channel. I love all of you guys. If you're not yet a subscriber, consider subscribing. What are you waiting on? I'll catch you guys in the next video. Until next time, peace.
Drop.